Okay, I would like to welcome everyone to this webinar. Very minor housekeeping items. The webinar is being recorded so that other people who've missed it can still listen to it. We'll have a Q&A at the end of the webinar, and we'll also have a feedback form. So with that, I'd like to say that we'll be talking about renewable energy today. And why we partnered with Octopus Energy. At Nest, we want to invest in opportunities that reduce the carbon footprint of our members' pension pots. We want to marry good investment opportunities with improving the planet and creating a world that all our members will want to retire into. And we wanted to achieve this by partnering with a firm that could help us allocate capital to renewable energy. So today, I'm really excited to introduce Alex Brierley, who is co-head of Octopus Energy Generation, the fund management arm of Octopus Energy. And many of you may know you get your energy from Octopus, but that's a different arm of Octopus Energy than the asset management group. Alex has worked for Octopus for 10 years and has helped build Octopus Energy Generation into one of the largest specialized energy transition fund management companies in Europe. So with that, Alex, tell us a little bit about the partnership you have with Nest.
Sure. So I think my team probably first met the Nest Invest team about 7 or so years ago. And it was very clear to us that Nest was beginning to think through how they might allocate members' capital to the energy transition and the renewable energy sector. And of course, that makes, I think, complete sense with today roughly 13 million members, many of whom will be concerned about the potentially catastrophic effects of climate change. It makes sense that Nest, such a big influential fund, gets behind this really important investment opportunity. So we sat down with the team at Nest. We explained how we were helping investors allocate and invest capital into the renewable energy market and the wider energy transition. And together, we began to co-develop an investment strategy. And that investment strategy is essentially in two parts. So we have a core investment mandate where we're investing about 75% of the fund, and it's a fund that we call the Sky Fund. We're investing about 75% of that fund in construction-ready or operational wind and solar assets. And we're doing that in some of the main energy markets around the world. So in the UK and Europe, in the US, and also in Australia. So that became the kind of core mandate. And I think that makes sense because if you speak to any of the leading consultants out there, they'll tell you that roughly $250 trillion is required to be invested into the energy transition in order for governments and societies that have committed to net zero to actually get there. So it's a huge investment opportunity, and the core part of our investment strategy focuses on that core renewable energy infrastructure. And then the other 25% or so of the fund, we call the kind of strategic bucket, where we might invest in other OECD countries outside of the ones I've already mentioned in that core portfolio. We may invest in wider technologies outside wind, solar, and bioenergy. And indeed, we might invest in companies that are carrying out the development of new renewable energy infrastructure. So earlier in that infrastructure sort of life cycle. So that became the Sky investment strategy. And we launched the fund, I think it was about 4 years ago now, with a £250 million cornerstone investment by Nest, for which thank you very much to the Nest Invest team and obviously all the members. And the final thing to say is we together, Nest and Octopus Energy Generation, hoped that by launching this fund and this investment strategy, we would catalyze other investors to come into the fund and really build a very, very significant mandate that, first of all, delivered good financial returns for members, and secondly, had a huge positive impact on people and the planet.
So that's pretty exciting. So 4 years ago, we created this partnership. So where are we now, 4 years later?
Very happily, that sort of vision that we both had for the fund has come to fruition. The fund is now about £1.5 billion in committed equity. We have brought 13 other investors. So obviously Nest remains a huge part of the strategy, but we brought 13 other investors in alongside Nest and its members to the Sky Fund. Happily, the majority of those investors are UK investors, but we've more recently been introducing the fund and the investment strategy to investors across Europe and also in Asia. And we've begun to see some very significant investors in both of those two regions commit to the fund as well. So it's become a very big fund. The team at Octopus Energy Generation have been very busy investing that capital. So we've now invested in around 40 or so different investments, many wind and solar farms. So I think about 81% of the investments that we've made are in that sort of core wind and solar infrastructure. But we have made some investments into some development companies and also some wider energy transition platforms. The portfolio is nicely diverse now. So we've invested, I think, in 12 different countries. And a lot of that portfolio is now operational. And by operational, I mean we have operational wind farms and solar farms that are delivering green electricity into the market. So roughly 62% of the portfolio is operational today, with a large part still in construction, but will be generating a huge amount of renewable electricity in the very near future.
Great. So yeah, and our activities with Octopus have grown as Nest has grown. We're quite excited about the investment returns in renewables. It's also a great inflation hedge. And this renewable energy investment is included in both the Nest Ethical Fund, the High Risk Fund, as well as our Target Date Fund. So it's really a core part of what Nest is invested in. So with that, tell us a little bit about the achievements and the milestones that you'd like to highlight. And maybe before I have you go through that, I just want to tell you that my favorite investment is the Hornsea 1 wind farm, the offshore wind farm. And this wind farm provides energy for 1 million people. So it's really meaningful. And you may remember that we took some of our members to see that in that wind farm so that they could really see how their pension pots are really being invested and contributing to this energy transition. So tell us a little bit about what you're excited about in the portfolio.
Yeah, that was a great day going up to Grimsby to introduce some of the Nest members to the renewable energy industry. It was great fun. I think they really enjoyed it. And that would definitely be actually one of the sort of highlights of the last 4 years for me. So perhaps to your question, I'll sort of look back for some of the achievements we've had today and then look a little bit to the future. So first of all, investing in renewable energy is not a philanthropic activity. So this needs to generate good returns for your members, as you said, Rachel. So I'm very proud that the fund has achieved very strong returns since inception. So about 10.5, 10.6% total annualized returns, which have obviously helped your members grow their savings for retirement. And that's predominantly driven, I think, by renewable energies core investment characteristics. So once you have a wind farm or a solar farm up and running, these assets produce very long-term, highly predictable cash flows. The wind normally blows. The sun,
particularly in the UK.
Particularly in the UK, the sun always shines. Sometimes in the UK, but you can predict with quite a high degree of precision how much electricity you're going to generate. And then because of the way governments and societies are procuring this kind of new energy infrastructure, there are revenue support mechanisms that give you a very predictable price that you get paid for that electricity. And quite often, those contracts that you have with countries, governments, societies are inflation linked. So you get highly predictable inflation-linked cash flows, and that helps us deliver those strong returns. The second thing I'm proud about on behalf of Nest is going back to the sort of inception of this strategy. This was a shared vision. We were very proud that Nest wanted to support us in building the Sky Fund into a truly unique, highly diversified fund. For Nest members, it was great because we're able to afford Nest very, very competitive fees in order for them to make that cornerstone strategies or that cornerstone investment. And so Nest members are not only benefiting from those high returns, but also from relatively low fees. So looking back, those are some achievements that I'm really proud of. And the vision that we all had at the start of our partnership is coming to light. Looking forwards, we've talked quite a lot about wind and solar. I mentioned at the start that roughly $250 trillion is required to see net zero happen across all the countries that have committed to net zero. And roughly half of that is needed for wind and solar infrastructure that will form the backbone of net zero energy markets. But the other half of that needs to be invested in a huge array of other activities. Broadly speaking, governments around the world have got a very simple strategy on how to get to net zero. It's to decarbonize electricity markets by building wind and solar farms, and then to power as much as you humanly possibly can with electricity. And that means you've got some huge sectors transforming from fossil fuel sectors into net zero sectors. So obviously in transport, we're seeing the wide uptake and adoption of electric vehicles. But Sky is attacking one part of the market that is very, very difficult actually to decarbonize, and that is heating, both at the home heating level and also at the industrial level. So Sky has invested in a company called Kenza. Kenza installs ground source heat pumps that deliver very, very low cost, clean heating to homes, and that's displacing gas boilers within people's homes and businesses. And a second investment that Sky has made is into a joint venture that we have with a renewable energy developer called RES. That joint venture is called Hyro, and that is focused on helping to decarbonize industrial processes. So Hyro is delivering green hydrogen to Kimberly-Clark in Northfleet in Kent. And we're using that green hydrogen to displace gas from their industrial processes, and that's delivering clean, sustainable Kleenex tissues and Andrex loo paper. So that's two things that I'm very, very proud that Sky's helping to achieve, and in that very hard to decarbonize heating sector.
Yeah, that's really exciting. So Nest is definitely committed to the net zero transition. We see this as a mega trend that we want to get ahead of. And there are actually some other things that we're doing in the portfolio, like investing in timber. And we also have a public equity thematic portfolio that's looking at how the public equity markets can help us in this transition as well. But coming back to renewables and Octopus, tell us a little bit more about what is the where you're focused on today beyond the investments today, but what else you're looking at.
Absolutely. So look, I've already spoken, there's a huge investment requirement in order to help countries get to net zero. But the main opportunities out there, I'll stay close to home for a second. We have a new Labour government, which has been elected with a massive mandate from the UK public. And I think a core part of Labour's manifesto was green growth. So they've set out a green growth plan for the UK. And we're seeing their sort of early activities really confirm that they're getting behind that manifesto. So they're setting up, or in the process of setting up, an institution called Great British Energy, I think now headquartered in Aberdeen, up in Scotland. And they have made a huge promise to the UK public, which is to get the UK's electricity system to net zero by 2030. And that is a huge commitment. And to give you a feel for how huge that is, that requires, I think, a doubling of onshore wind capacity in the UK, a tripling of solar capacity in the UK, and a quadrupling of offshore wind capacity in the UK. And the UK had the biggest offshore wind market, I think, until last year when China overtook it. But that is a huge commitment to be making, and one that needs a huge amount of investment. And I think that is that's estimated requiring roughly £40 billion a year from now until 2030. So there's a lot of work to be done in wind and solar right here at home. And so that is a big opportunity that we're focused on. But it's not just wind and solar, as we've been talking about. So to give you a feel for some other areas that we think are really exciting, there are now 1.3 million electric vehicles on the roads here in the UK, and a lot of those electric vehicles will be charged at home. But we need to make it very, very easy for users of electric vehicles to charge their cars and to get sort of the length and breadth of the country. So Sky has invested in an electric vehicle charging business that is installing some electric vehicle chargers up in the north of England. That company is called BEV. And that is something that we will continue to support, because we believe that electric vehicles are better on lots of different levels. They don't use petrol and diesel, and therefore aren't adding to the climate crisis. They're fun to drive, and so we believe
they're quiet.
And they're quiet. And I think we were talking just before I was on air. I was in my first ever driverless taxi in San Francisco last week. The future is here. It's an amazing experience. So we're getting behind making it easy for people to adopt that kind of vehicle, and then. Other exciting things that are happening out there. Many of the people listening might have heard and be reading about the huge demand for electricity and renewable electricity from the growth in AI. I mean, the hyperscalers out there, the Googles, the Amazons that are building these data centers to support this massive new technology and new capability that we're all hopefully going to benefit from in the future. That requires a huge amount of electricity. And so that's increasing the demand for kind of the core product, if you like, of Sky. And we're very interested in the sort of coming together of those two parts of the market. So data centers and the massive power requirement, and wind and solar farms. And we've invested some of Sky's capital in a business here in the UK that's called Deep Green. Deep Green does something really fun, I think. So we're installing grid edge data centers in the plant rooms of community swimming pools. Data centers require cooling in order to keep them cool and sort of operating effectively. And we're using the cold water from the swimming pool to cool the data centers. We're recycling the warm water that comes out the back of the data center back into the swimming pool. That lowers the cost of the data center, lowers the cost of heating swimming pools, all powered with renewable electricity. So those are sort of some newer areas that we're excited about and getting behind.
Yeah, so when you go to your community swimming pool right now, you'll be swimming on top of a data center.
Exactly.
That's great. So this has all been very positive, but obviously, there are challenges and there are barriers out there. So help us understand a little bit what some of those challenges and barriers are that you face when you're looking to deploy this capital into these exciting opportunities.
Yeah, loads of challenges, loads of barriers out there, but one has to remain optimistic. I suppose that uptake and that requirement for wind and solar to form the backbones requires a huge build out over the course of a short period of time. And there are two specific barriers I would talk to in order to sort of get the wind and solar online that we need to. Barrier number one is around planning permissions. Now, building big infrastructure of any different sort in people's kind of local communities is always, or has always been, a contentious issue. And the planning process has taken a huge amount of time. So it can take you 4 or 5 years to get a planning permission for a new wind farm or a new solar farm. And if we are going to achieve net zero in the UK by 2030, or net zero electricity in the UK by 2030, we're going to have to speed that up. So that is a big barrier. The good news is that the Labour government, I think in its first week, actually, when coming into government, have changed some of the planning laws in order to, I hope, enable the faster sort of granting of planning permissions to wind farms, solar farms here in the UK. And I think I have a lot of sympathy with people who are being asked to host this new infrastructure in their local communities. It can be quite intrusive. Not everybody likes wind farms. But what we've found at Octopus Energy is if the local communities are getting a benefit from hosting this infrastructure. So, for example, if we're putting up a wind farm in a local community and that community benefits from having the wind farm there through cheaper electricity, we run something called the fan club. What you find is that local communities absolutely love the infrastructure. And so one of the main things we have to change is for people hosting wind farms, solar farms, new grid networks have got to benefit from having this in their communities, in their local areas. And when they get those benefits, then they advocate for more. And that is a big change that I think is required here in the UK.
And I think that's true with Hornsea 1, the one that I like so much, right? The people of Grimsby actually get cheaper electricity. Absolutely
right. So that's, as I say, sort of one of our favorite assets and is part of the fan club. So people in certain postcodes around the Grimsby area benefit from lower cost electricity, and I'm absolutely convinced that means that they advocate for more. So yes. The second thing that needs to change here in the UK and in many markets around the world is the length of time it takes to get a grid connection. So just to explain what a grid connection is, obviously you get a planning permission, you can build a wind farm, but unless you're allowed to connect your wind farm into the grid and start sort of delivering those renewable electrons to the market, there's no point in building your wind farm. Mm-hmm. And Sky has invested in several different development companies, and I suspect all of them are frustrated at the amount of time it takes to get grid connections. You can sometimes wait 10 years for a grid connection, which is ridiculous in this day and age. So we need to speed up the amount of time that it takes to get these grid connections. And if we can change the planning and the grid connection process to something that is swifter, then we stand a chance of getting to net zero by 2030.
Okay, great. Okay, that was super helpful. So I want to remind everyone that we will be moving to Q&A pretty soon. So if you have questions, please go ahead. In fact, while you're answering the next question, I might look to see if there already are some questions in the queue. But I wanted you to talk now about the trends, technologies, and policies you might see over the next 5 years that will impact renewable energy.
Yeah, it's a great question, and so many different trends and policy and regulatory changes will come up as the world gets to net zero. But um, for us at Octopus Energy, one critical thing I think will shape the future of renewable electricity markets, and that is to ensure that the new net zero system is cheaper and therefore more affordable for customers than the legacy system of fossil fuels. And in our mind, that new system is quite clearly going to be cheaper. So let's step through that. Wind and solar generation is, by some distance, the cheapest form of electricity generation in today's world. So the more you build, the cheaper electricity supply should be for customers. So that's tenet number one. What you often hear, and the kind of stones that get thrown at the market, is all well and good having sort of wind and solar, and yes, it's cheaper, but what happens when the wind doesn't blow and the sun isn't shining? And obviously, what's required there is storage. And many people will talk about the need to invest billions and billions and billions of pounds in various forms of kind of battery storage or long duration storage, all sorts of different things. But we firmly believe a huge amount of storage capability is arriving in energy systems globally, and that's in the form of electric vehicles. So as we've already talked about, customers are buying electric vehicles, and each and every one of those has got a pretty large battery in it. And if customers can be incentivized to kind of optimize when they're charging and when almost discharging the power from their electric vehicles at times where there's low wind and low sun, then you have this very, very efficient market. And in our wider business at Octopus Energy, we have hundreds of thousands of electric vehicles now connected up to our kind of technology platform, which is called Kraken. And Kraken is not only making sure that customers' electric vehicles are charged in the morning, ready for them to go and do the school run or their commute, but it's also optimizing the time that you're either charging or discharging those cars. And that we think is a sort of bedrock of net zero energy systems. So I'm very excited about that. And if those two things together can lead to cheaper electricity for customers, and we can prove that out. We have homegrown renewable electricity delivering cheaper, more affordable energy for the UK or for any other net zero market. And that is a huge opportunity. And the kind of trends and changes that we want to see in the UK energy market and in many markets around the world are those changes that support that new, highly efficient, cheaper electricity system. So that's what we're keeping a close eye on, and that's what we're advocating for, because the moment net zero proves to be better for the customer, cheaper for the customer, and of course, low carbon, then the transition is unstoppable.
Yeah, no, I remember your team taking me through that and thinking that, there's a supply side of the net zero transition, but there's also a demand side of the net zero transition. And I think, yeah, giving consumers tools to understand how they're using energy is just such a great part of the solution, and really happy that Octopus is participating in that. It's so important to impact the demand side of energy as well. So we do have some questions coming in. So I think all of them are good questions. So I'll just start at the top. How do you prioritize? I mean, there's so many things you can do. How do you decide what's the next investment that you're going to make?
I think that's a great question. So lots of different levels to that question. But first of all, we want to build a diversified portfolio for our investors. And we want to do that because diversification is important. If you are 100% invested in one market, one technology, and something happens, that's not a great thing for investors. So firstly, we're looking at investments, making sure that we're building a big diversified portfolio of assets and companies, because we believe that's the right thing to do. And so in technologies, quite often when the wind isn't blowing, impacting our wind portfolio, there's more sun, which is good for our solar portfolio and vice versa. So you want diversification there. Politics, regulatory setups change, and you want to be diversified sort of across different countries, different regulatory networks. So at one level, we think about new investments from sort of building a big diversified portfolio that kind of strengthens that risk-adjusted return back to our investors. Then our kind of pipelines of investment opportunities run into the tens of billions of pounds at any given point in time, and we haven't got 10 billion pounds to spend sort of in 1 month, and you probably wouldn't want to, because not all of those are great investment opportunities. So the way we as a team are looking at things is, where can we find the best relative return at any given point in time? Now that could be coming from offshore wind, it could be coming from onshore wind, it could be coming from France, Germany, Spain. So we're thinking on those two different levels. First of all, building the right diversified portfolio, and then secondly, finding the right relative, or the best relative return.
So you touched on politics in that answer, and there is a question, as we would expect it, on how changes of government or policy make a difference in demands, and the returns, or what you might invest in.
Yeah. So look, there's been plenty of political change in two markets very recently. I've touched on sort of the new Labour government here in the UK. They've been invested on a very strong mandate from the UK public, and one centred on green growth. And what has that done? I think, well, I'm lucky enough to travel a lot. I speak to our investors, looking at investments, both investments we've made and potential new investments. So I travel a lot. And what is very clear is that the announcements made by the Labour government and the sort of ambition of the UK over the course of the next 4 or 5 years has been noticed by international investors, and I think that's really exciting, both as a kind of a UK citizen, but also as the head of a team that's invested many billions in UK infrastructure. So when you get that kind of supportive, very clear direction given by leaders, then that attracts investment, and that's a good fillip for a market. Last week, I was traveling the US, again, a political change going on over there. So President Trump is coming in. He has very publicly sort of got slogans like "drill, baby, drill," which aren't necessarily sort of pro-renewables, but you have a federal system in the US. I spoke to, I don't know, 50 to 20 investors, a few other types of counterparties in the US last week, and it was very, very interesting and informative. Those investors will continue investing in the energy transition in the US. They see it as something they should do. They can see positive returns or strong risk-adjusted returns from that market. Now, will things be slightly faster or slightly slower under President Trump? Let's wait and see. But the direction is pretty clear. Where renewable energy infrastructure can deliver cheaper power for a market, I think at some point in time in the future, it's only going to go that way.
Yeah, and you hear about the fact that a lot of the investment from the Inflation Reduction Act actually went to red states that are going to continue to be supportive of that investment into the climate transition. So
Absolutely.
some of these things will just keep going on because they make sense. Yeah. So I have a question here from David Knight, and he says, how likely is it that the UK will hit its targets for green electricity generation, and what will be the main challenges?
Yeah. So on the challenges, I've mentioned two: speed up planning, speed up grid connections. Challenge number three will be raise the amount of money to deliver the 40 billion or so each year that's required up to 2030. So those are the challenges. What's the likelihood? Look, it's a very ambitious target. That's not just me talking about it. I think NESO, which is sort of the system operator here in the UK, they released a big report, I think it was a couple of weeks ago, and they themselves said, look, it's a huge challenge, but it's possible. So as far as I'm concerned, the important thing is to set that ambitious target and work very, very hard to get as close to it as possible. I can't give a percentage likelihood.
Got it. Here's an interesting question. What investment opportunities are there on addressing grid intermittency, for example, batteries and hydro storage? And is there a role for nuclear in the UK?
Great question. So let's talk about intermittency in grids. So I spoke about the way we want to see the world, which is as much of the flexibility that's needed, as much of that storage requirement that's needed to come from electric vehicles, because people are buying them anyway. It's a very low cost, efficient way to get the storage for intermittent wind and solar. So that's what we want to see. There are of course, it's not just electric vehicles. If you speak to the system operator, which we do regularly, what are they very worried about? It's less worried about the sort of the daily shifts you might get in wind and solar. They know that is eminently solvable, but maybe 4 to 6 weeks of no wind over a very cold winter, then you need a longer duration storage. And I think that is something that we need to think about as a country, and probably where some new investment needs to go in new technology in order to get there. So that was on the kind of intermittency challenge, the grid challenge. I've forgotten the second. Nuclear. Is
there a role for nuclear?
Well, the answer to that is, of course, yes, because we've got nuclear power stations operating here in the UK. We've got a new, very expensive, very large nuclear power station being built in Hinkley-C in the West Country. I'd like to think that we can get there without nuclear, and we can get there cheaper with wind and solar. That is where we want to get to as a business.
There have been advances in nuclear that are worth watching, right?
Oh, there's a huge amount. I've spent a bit of time with some nuclear fusion businesses recently. One UK business actually called Octopus Energy, and also with a US business. Fusion is fascinating, and 10, 20 years time could be very, very exciting technology. But again, it's quite a long way away. And it's quite expensive. Yeah. So we're focused on wind and solar.
Yep. Do you think that the recent meeting between Starmer and the Chinese president will help open doors for future investments by Octopus in China? And can you compete for deals in China?
So actually, well, so our portfolio today, it kind of covers US, Canada, UK, Europe, and various different markets in Asia, but not China. As I said, I was in the US last week. We're a pretty big 170-person team, but a relatively small team. And we're trying to tackle quite a lot of the globe already. So China is a huge market, not a simple one. And so we haven't got immediate plans to be investing capital in China today? That first part of the question. We need to remember China is a big part of renewable energy infrastructure. So I started my career in renewable energy probably close to 20 years or so ago. I spent 3 years getting to understand, traveling to China very, very regularly, getting to understand the supply chain, because a huge part of the supply chain for renewable electricity, particularly in solar markets and battery storage markets, is from China. So is it important to understand it from a supply chain perspective? Yes, absolutely. It's the first thing to say. And some of the very hot topics in renewables at the moment, particularly in the US, are around tariffs. That President Trump has been talking about potentially raising on Chinese imports to the US. So at that level, yes, we're very interested in those types of conversations. I know that Sakir Starmer met the Chinese president, was it earlier this week, late last week? I haven't got any particular comment on that meeting. But yeah, China's important. Certainly no immediate plans to be investing into China. Certainly very, very interested in China, particularly from a supply chain perspective.
Great. Okay. Well, thank you. You were very generous with your time. Really enjoyed the conversation. Thank all of you for joining. And there will be a feedback form for all of you. And if there are additional questions that we were not able to address, please do send them, because I'm sure Alex will be very happy to answer them.
Indeed.
So with that, thank you very much.